Got wood? Want wood? Fancy a quick pump and dump? Mattioli Woods, which is actually a British wealth management company, is in the latter stages of being taken over by Pollen Street Capital, a British private equity company. Due to the extremely short timeline until the close of this deal, it offers the arbitrager an interesting investment opportunity. Pollen Street has made a hard offer of £8.04 to buy Mattioli Woods, and the expected completion date is the 3rd of September. So, is it possible for an intelligent investor to come late to a deal like this and still enjoy a good PUMP? If this video gets your pecker up, I would appreciate it if you would give the like button a little tickle. Anyway, let's take a look at the numbers. The spot price of Mattioli Woods is currently £7.95, and given this is a cash-only transaction with no short position required, nor any dividends or other variables for which to make allowance, the calculations are very simple. An arbitrager can take a long position in Mattioli Woods for £7.95 per share, hold the position for 14 days, and then receive £8.04 in cash from Pollen Street when the deal closes. This means such an investor will receive a return of 1.12%, which, due to the very short holding time, equates to an annual rate of return of 29.18%. with a risk-adjusted return of 20.85%. Should an investor really have a hard on for this deal and decide to apply 50% leverage to the position, they can expect a return of 2.05% or an annualized rate of 53.37%, which means a risk-adjusted return of 36.76%. Such an investor should be aware any quick pump and dump obviously comes with risks. Should the deal fall apart, and the share price of Mattioli Woods fall back to its pre-takeover level of £5.50 per share, an investor would be sitting on a loss of 30.83%, which is a pretty big hit for a short-term ride on this English wood. When we consider that the boards of directors and the shareholders of Mattioli Woods have voted in favour of the buyout, the risk of the deal failing is very low, which explains the small spread available for the investor. The only potential stumbling block remaining is satisfying the National Savings and Investment Act conditions, which will be ruled on in a standard court sanction hearing due to take place on the 30th of August. This final requirement, and the significant expected fall in the Mattioli Woods share price should the deal fail to close, result in an even money probability of 96.79% for this transaction. There's no such thing as a free lunch or a risk-free pump and dump, but an investor could get excited about a quick ride here. What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.